want to talk to you about how to operate in real estate tax efficient. And that's really the key word, tax efficient. Many of you are operating in real estate and you're doing various things, but depending on what you're doing in real estate will determine the tax implication. All real estate is not the same. So one of the things that I want you to consider as we're thinking about your real estate is to think about the activity that you're doing in real estate. For example, if you are buying and holding real estate, typically you're gonna buy and hold in like an LLC. Why is that? Because real estate is considered to be passive income, and passive income does not drive self-employment tax. That's that extra 15.3% tax that you're going to end up paying if you're not operating tax efficient. But remember, that's in a buy and hold scenario. You typically want to be in an LLC. A lot of you, though, are not just buying and holding real estate. Some of you are actually flipping property. You're buying real estate, you're fixing it up, and then you're selling it, which we call flipping property. When you're flipping property, the best way to be tax efficient is to flip inside of an S corporation. That's right, an S corporation. The reason why I say that is because S corporations by nature do not drive self-employment tax. They don't add on that extra 15.3%. When you are flipping property, you are not generating passive income. You're generating what's called active income. That's income that you're generating that you are actively doing something to make that money happen. Active income is hit with self-employment tax, the 15.3%, and it's also hit with income tax. So if you're in the 15% tax bracket, and we're just strictly talking federal here, plus that Social Security Medicare tax, you're talking about 30%, and we're not even talking about being in a taxable state. So when you're flipping property, the entity of choice is extremely, extremely important. What if you are wholesaling property? What if you are negotiating the deal between the buyer and the seller and you're actually doing wholesaling real estate? You also got to consider the activity, and that is also an activity in real estate that is considered active income. Again, that's not something that you typically, notice I said typically, want to do inside of an LLC because it is going to drive a tremendous amount of tax. So some things that you have to consider as you are thinking about how you're going to participate out there in the real estate world, whether you're going to be a buy and hold individual, whether you're going to be a fix and flip individual, whether you're going to wholesale real estate, or potentially even be into real estate syndications. The type of entity that you're operating in is going to drive the income tax. Very important. And you might even want to consider layering it with two entities, two types of entities, different structure. Why do I say that? Because you can then choose whether your income is going to be subject to that self-employment tax, whether you're going to move some income over to another entity and only subject a portion to self-employment tax. It really is going to depend on, number one, your strategy. Number two, the type of activity that you're doing with the real estate. And number three, it is going to depend on the structure that you're operating in, because structure and activity drives the taxation and how much you pay. You also want to give some consideration to the state that you're operating in, because different states have different requirements as a result of you having activity inside of real estate. So make sure as you're thinking about your real estate, your activities, and being tax efficient, that we take those things into consideration so that we can lower the income tax as legally low as possible so you can be tax efficient and get the biggest return on your investment. Because it's not just about the dollars that you make on the deal, it's about the dollars that you keep in your pocket and that we legally not allow Uncle Sam to hang on to.